The stock market has been decimated, people are being laid off, and yet some people will come out of this pandemic very rich. What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. Things went from great 2 months ago to bad 2 weeks ago to horrible this week with no bottom in sight. People's retirement plans and 401ks are tanking. The New York Stock Exchange is empty because no one's allowed to work there right now. And now more companies are begging for bailouts. I just talked about how airlines went to Congress to ask for a taxpayer-funded bailout. And now Boeing is doing the exact same thing. They went to Congress and they asked them for a taxpayer-funded bailout because of their greedy business decisions. The number one most important thing right now is your health. This pandemic is a real thing and people are getting sick and dying, so take it seriously. Even if you're young and healthy, you can spread it to somebody else, so don't be selfish. Second, you need to take care of your money because when all this is said and done, you want to be one of the people that are walking out of this a financial winner and not one of the people walking out of this losing 70% of their life savings. Now, today's Thursday and I don't release videos on Thursdays, but because things have been so crazy in the financial world recently, I'm gonna try to make daily financial videos to help you take care of your money. And today I'm gonna be going over 5.5 things you need to do to take care of your money during this pandemic. So make sure you watch this video until the end because you don't wanna miss any of these things. But before we get into that, hit that thumbs up button below because if you don't, then YouTube doesn't show our video to anybody else. And subscribe to the Minority Mindset YouTube channel. That way you don't miss our financial education videos every single week. And hit that little notification bell too, because if you don't, then YouTube doesn't let you know when our new videos are released. First, be smart with your cash. People will lose their jobs and businesses will shut down. This is not the time to be spending money on things you don't need because we don't know how long this craziness is gonna last. Yes, that means no more shopping at Gucci. Like literally, as I was recording this video, I got an email from my state's Department of Labor pretty much begging business owners not to fire their employees right now. I've been talking about this for a long time now, so I'm not gonna hammer it today, but if you don't have an emergency savings fund, you need to save some cash quickly. Sell what you can, stop spending money, and cancel your subscriptions. You need to. This is not an option right now. You need to build a cash buffer because the next few months are gonna be a big question mark, which brings me to 2. Protect your cash. Over the last month or so, at least the last couple of weeks, people stopped spending money. And that meant businesses stopped making money. And businesses needed cash to stay in business, so they ran to banks trying to borrow as much money as possible. This way they had money to continue funding their operations and continue to pay their employees. At first we were told that it wasn't a big deal because yeah, businesses were running low on cash, but they were able to get loans no problem. But then we were told by the Federal Reserve that banks were running out of money. On March 12th, 2020, the Fed came out with an emergency $1.5 trillion cash injection into the market. This way banks wouldn't run out of money and that way they could continue making these loans to businesses to keep them in business. But apparently $1.5 trillion wasn't enough. On Tuesday, March 17th, the Federal Reserve came out and they offered up to $1 trillion a day in emergency funding to make sure banks don't run out of money and to make sure our whole financial system doesn't collapse. From an inflation perspective, that's bad news. I'll save that for a later video. But this means 2 things for your cash. 1, you need to keep some cash with you at home. Not a whole lot, but at least a couple weeks worth of expenses worth, just in case your bank runs into some short-term liquidity issues. Like for example, if businesses borrow a whole bunch of money from the bank and then they go bankrupt with your and your bank's money. And 2, if you have more than $250,000 in one savings account in one bank, which is the FDIC Insurance limit, you should move the extra cash into a different savings account in a different bank. This way your money is protected. Now, if worst comes to worst and your bank shuts down, the FDIC will give you up to $250,000 per account. That means if you have $350,000 sitting in one savings account in one bank and that bank goes under, FDIC will come and give you $250,000, but the other $100,000 is gone. I'm not saying this to make you panic. I'm saying this so you're prepared for anything. I hope we don't have a run on the banks, and it's not very likely, but it's better to be over prepared than not. I mean, no one thought we'd be talking about a nationwide shutdown a month ago, and the government's trying to take preventative measures to prevent a run on money market mutual funds, so better to be safe than sorry. Which brings me to 3. Have risk protection. The goal of being financially educated is to be able to live off of your investments without relying on the government or your pension or anything in between. If your investments or your assets, whatever you want to call it, are paying your family enough to cover your monthly expenses, you are financially free. You can live your life however you want because your investments are funding it. And you don't got to worry about losing an income. The problem is it takes time to build that type of financial freedom, and you don't want to run into an issue where the breadwinner of your family unexpectedly dies and now your family is left struggling financially because it lost an income stream. This is where life insurance can come in handy. Now, I know nobody likes talking about life insurance, but it's a small price you pay today that can give you a big peace of mind while you're building your wealth. Life insurance is a great risk management strategy because as you're building your investments and your wealth, it's there to protect you from the unexpected and something tragic. That way, if something bad were to happen, life insurance is there to take care of your family, financially at least. And it's a lot cheaper to buy life insurance when you're healthy. I mean, if this virus wasn't enough to show you that anything's possible, then I don't know what is. To put some numbers on it, if you are a healthy 30-year-old guy, you can get a $1 million life insurance policy for a 15-year term for less than $1 a day, something like $22 a month. If something unfortunate happens during that term and you die, your family will get a $1 million check. If you don't, then your family will get nothing, but at least you had that peace of mind as you were building your wealth. If you're not sure about how to go about getting life insurance, or if you want to learn more about how life insurance works, or if you want to see how much life insurance would cost you, our team broke down how life insurance works, and you can learn all this information on an article on our blog, and I have the link for you in the description below. The article goes over the different types of life insurance, the things you need to know before you buy life insurance, and it shows you how you can get a free quote. Plus, you'll also see how you can get the best deal on your life insurance policy, because the last thing you want to do is overpay for life insurance. So if you do want to learn more about life insurance and you want to see how much life insurance would cost you in less than 5 minutes, I got the article that will show you how you can do all that in the description below. 4th, don't panic sell. Between February 12th, 2020 and March 18th, 2020, the Dow Jones fell about 10,000 points. We have never seen a drop that big, that fast in history. If you were buying stocks over the last couple years, chances are your portfolio is red. But this is not the time to panic sell. Before you make any rash decisions about selling or buying, take a deep breath and put things in perspective. I'm losing money. If you are invested for the long term, like you're investing for retirement, which is 10, 20, 30 years away, and the companies you're invested in are not on the verge of bankruptcy, leave your investments alone. Just close your eyes and read a book. Well, I guess you'd have to open your eyes to read the book, but you know what I mean. Leave your investment alone. If you think a company you're invested in is on the verge of bankruptcy, then you need to sell that stock as fast as you can and get whatever cash you can out before it's too late. You can learn this information by studying a company's financial statements to see how much cash they have, and by listening to a company's quarterly earnings statements. I think things are gonna get worse before they get better, but you need to remember one thing. You don't actually lose money unless you sell. History has showed us time and time again that over the long run, strong companies and the economy will recover, which brings me to 5. How to come out a financial winner. I'm gonna emphasize this again. The most important thing right now is your health. If you're not healthy, nothing else matters, so take your precautions. Secondly, take care of your family's finances, and you need to remember that more millionaires are made during recessions than any other time. Do you want to know why? It's because when the economy tanks, investments go on sale, and people have the opportunity to buy great investments and great companies at huge discounts. Chances are this collapse is going to show us the exact same thing. 10 years from today, if not 5, some people will be very rich because of how they use their money during this crash. Now, before I go any further with investing, let me just remind you, I am an attorney, but I'm not your attorney or your financial advisor. I'm just a random guy on YouTube. Investing has risks. You are never guaranteed to make money when you invest. You might even lose money, so always do your own due diligence and talk to a professional in your area if you have any questions. If you have extra cash or an investment fund that you won't need for a few years, it's not a bad idea to take some of that money and put it into a stock brokerage and start thinking about buying. The dilemma is you don't want to have to sit there and try to catch a falling knife because, we don't know how far down it's gonna go. I mean, there's a chance that the stock market can lose another 50% of its value. But you also don't want to miss out on a historic buying opportunity where you can buy great companies at huge discounts. What I like to do, remember, I'm just a random guy on YouTube, so do your own due diligence, is I like to buy in phases. I don't think we're at the bottom. If bankruptcies start to come in, it's probably going to get worse. When the stocks or funds that I want to invest in come down in price, I buy. But I don't buy all at once. I buy gradually, and as things come down harder, I invest more aggressively. If you've never bought a stock before and you don't know how to analyze a company and you don't know what's a good investment or not, you might just want to buy an index fund, which is something that mimics the stock market or something that mimics the S&P 500. This way, if the stock market goes up, your investment goes up, and you don't have to worry about your company going bankrupt and wiping out all of your investment. And commodities like gold tend to do really well during recessions. Like when the 2008 crash happened, gold shot up. But strangely, right now, gold has been coming down in price, according to some experts, because people have been selling gold so they can buy more stocks. And number 5.5, this one isn't fully how to protect your money, but if the news has you feeling anxious, turn off the news. Lots of people are at home worried about what's happening, and they're sitting there watching the news all day, and they're getting really anxious because the news keeps telling you about how the world is ending. But let me let you in on a little secret. The news makes money when you're scared. They're in the business of selling emotion. It's kind of like reality TV. You don't know what's going to happen next, so you keep staring at the news. Now, obviously, there are real issues going on, and you need to take your precautions. But sitting there and freaking out won't help. So if the news is giving you anxiety, turn it off. Just take your precautions. This is actually one of the biggest reasons why we created the Minority Mindset newsletter, because I wanted to create a place where people could go and learn the finance and business news without getting drowned out in a bunch of emotions. Because according to the news, when things are good, nothing bad can ever happen. And when things are bad, the world is gonna end. Yeah, it can be frustrating. If you want to join our finance and business newsletter for free, where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet in a fun and entertaining way, this way you can be smart with your money. You can join by clicking the link up here or by clicking the link in the description below. It's free. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. And if you want to learn more about what different things you could be investing in during this crazy economy, I already made a video on it, and you can watch it on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.